can see, positive or a negative, tone in the next week. By the end, we'll conduct a small poll to understand the, likings about the webinar, and then finally we'll start with the Q&A session. So you have this Q&A button in front of your screen which you can use. So let's get started with a quick disclaimer first, that the main premise is to share the idea, means our understanding, our observations about the market. It's not a trading recommendation or a investment recommendation. So before making any decision based on the information shared, please take help from your financial advisor. Now, talking about the key indices, as we've discussed last week also, the tone looks negative. We were close to around 17,400 mark last Friday. We ended around 17,100 mark. So it was much of like, expected kind of a move that we were anticipating from the market. So both Nifty and Sensex, shed nearly 2% each, and in line with the, benchmark trend, most of the sectors also witnessed pressure. So we have the long list of top losers, starting with auto, which shed nearly 4%, then IT, 2.5%, banking financials, a constant, and then FMCG. On the gaining side, or maybe on the flatter note, we can say is that reality index could manage to end thanks to the rebound DLF in the last two trading sessions. Talking about the top gainers and losers from the Nifty 50 basket, we'll talk about the gainers first. So across sectors, we saw the move from the gaining basket also, like first from the OMC name BPCL. So in fact, all the other OMCs, they have done well, exceptionally, during the week, post breakdown in the crude. And then we have Tech Mahindra from the IT pack, which posted around 6% kind of a gain. Titan, Nestle, and LT, followed the trend and gained in the range of 1.66% to nearly 4%. On the short side, also you can see stocks from across sectors. So IndusInd Bank topped the list, roughly around 11% kind of a cut, followed by TCS, M&M, iShares, and Reliance. So Reliance, yes, it's one of the key reasons why we are seeing that Nifty and Sensex is down nearly 2%. Now, what we are anticipating for the next week, we'll talk about Nifty first. So if you remember, we were here, around these levels last week, and we've discussed about this declining channel. Declining channel means if you join the two highs in the recent months and the lows of the recent months, you'll get a formation. It looks like a channel in which the index has been trading in. So Nifty breached that mark, breached that channel for brief, but on the closing basis, if you see closely, it's trying to hold the lower band of the channel. So we have penetrated that mark. We come closer to 16,800, 850 levels, a day before. But on the closing basis, it was, closer to the upper band of the channel, lower band of the channel. So that clearly indicates that market are still, trying hard to maintain this channel in which it's trading in. So now for the next week, what we are anticipating is it could be a week of consolidation based on, the kind of a move that we have seen in the recent 3-4 trading sessions, plus the kind of, recovery that we are seeing in the index majors. So closure to this band, like 250 to 300 zone, is the first resistance area that Nifty is going to retest and face resistance, because earlier it was acting as a support. So once any stock or index breaks any critical support, so next time when we see a recovery, that supports become the resistance. So this zone 250 to 300 would be the first area of resistance. And then closure to around 17,400 mark is what we are eyeing as the next crucial hurdle during the week. There's a more of like upside seems capped. despite the kind of profit taking that we have seen or decline that we have seen in the recent weeks. Coming to the support area, so that remains the same, 16,800. That will continue to act as a strong support. In case if it reaches the same, then 16,600 will be the next major support. But as of now, we are expecting that Nifty should hold this mark, this green line, in the coming week as well. So as per the index, there's a possibility of a rebound. But how this rebound going to play out means what all sectors going to participate. So still we are not seeing any clear trend, when it comes to the sector participation. So there's no particular sector except the PSC, means the stocks, the public undertaking stocks, the public sector stocks. Other than that, all the other sectors basically are witnessing mixed trend, wherein we are seeing select stocks doing well, and but majority, yes, is largely trading in sync with the trend. Now, coming to the banking index. So if you remember that last week we were discussing that banking looks comparatively better. Why? Because these two lows, 39,600, 39,400, the budget day low, it was defending till Friday. So, but the last week the tone changed, and banking also came under pressure with decline in the index majors, in the banking majors like SDFC Twins, which pushed not only below the budget low, but in fact to the newer low in the passing week. But yes, in the last two trading session, we saw some recovery in the banking pack also. But still, we feel that after this decline, it's not going to be easy to reclaim 40,000 marks. So if you remember that in the last 2-3 webinars, we have kept on mentioning that 40,000 will continue to act as a make or break area. Below 40,000, we saw that sharp decline came in, wherein the index slipped closer to around 38,500 mark. So now we are seeing recovery, and it's going to be difficult to reclaim that level. Why I'm saying this? First, see this. If we join the last two lows, 39,400, 39,600. So we have this trend line resistance over here, which is very much the area where we are currently trading in. Then we have the long-term averages also, this red line. So both these points will definitely be a strong resistance area. So as of now, we are expecting this level to maintain as a strong resistance area. On the downside, 38,450, which is the recent swing low, and then 37,300. That would be the major resistance zone in the banking index. And importantly, what we have been observing is that within the private bank, we are seeing mixed trends. So earlier it was like majority of the private banks were trading in sync, except a couple of names like Kotak, which was not participating in the move. But rest of the private banks are witnessing a directional move in a similar trend. So as of now, what we are seeing is that SDFC Twins have recovered, SDFC Bank has recovered in today's trade. ICICI also witnessed some recovery, but Axis, IndusInd Bank, they didn't participate. So when we are seeing mixed trend within the private banking space, it's very difficult for the index to make any decisive recovery or any meaningful recovery. So once we cross 40,000 level, then 41,100 to 41,700 could be the zone where it might head to. So as of now, we need to see how this private banking majors perform. They should be in sync. And why we are not talking about PSUs? Because anyways, we are not seeing any decisive trend in the PSUs. Even SBI looks subdued to us. Canara Bank, Bank of Baroda, all these names are sitting on the sidelines or waiting for some confirmation from the private banking majors for any recovery. So as of now, the focus should be more on the private banking names. Considering the kind of rebound that we have seen in HDFC, there's a possibility that this rebound may extend and it looks comparatively okay. Then ICICI and followed by Axis and then Kotak. So this is how the ranking could be when it comes to the private banking majors. And IndusInd Bank, of course, it was among the top losers. So one should avoid, strictly avoid IndusInd Bank even at the current level, because it's a kind of like on the weekly chart a fresh breakdown. There is a possibility that it might continue to underperform at least in the near future. So this is about the key indices, both Nifty and the banking index. Now let's talk about stocks. So as we were discussing that, the PSCs are doing well, public sector undertakings, and there are multiple names from that basket. So be it NTPC, Coal India, GAIL, all these stocks are holding strong. So GAIL, in fact, we have discussed earlier also about this stock that it's gradually, inching towards its record high. You can see there's a broader consolidation range, and around that area, close to around 115, it almost retested the record highs, and then we saw this decline. But this time around, again, we are like, despite the all volatility, it's holding strong, and it's a weekly chart, it's not a daily chart. So that clearly shows the kind of resilience that this stock has been witnessing. So we may see a bit of consolidation in case the market corrects further from the current levels. Otherwise, there's a possibility that we can inch toward a newer high, in the coming week. So Gauge is one candidate that one can look at when it comes to long trades. Another interesting chart is IEX. So IEX is basically, very weak structure. If you talk about, the corrective phase, a gradual decline, very decisive decline. But, in the recent months, the stock witnessed a very strong consolidation. And off late, we are seeing noticeable rise in the volumes on the up days. Means when the stock is moving higher, we are seeing decent amount of buying interest. So now it's at a very critical juncture. It's about to cross its long-term average, this red line. So above 155, there will be a confirmation that this consolidation has ended successfully, and then there's a possibility that it might inch toward 165 to 170 in a very shorter period. So apart from GAIL, IEX is one stock which one can look at when it comes to positive trade. Now, since the tone is negative, what all stocks or sectors that one can look at? So SDFC Life is one stock from the life insurance space. In fact, the other life insurance names are also still, hovering either in range or witnessing pressure. So SDFC Life is gradually, drifting lower. So in fact, we have discussed about this stock around like a couple of weeks back also. So after marginal pause or consolidation, again, we are seeing that it's gradually drifting lower. So indications are in the favor that this tone would continue, because again, on the declining weeks, the volume inches higher. So that clearly shows that bears are completely under control. So SDFC Life is one stock which one can look at for shorting trade. And lastly on the list, Jubilant Food. Again, this stock we have discussed earlier also. See, there's a multiple reason to stick with one counter in case if they are consistently making, downtrend, or they are consistently making newer lows. So there is no point experimenting, with new names just for the sake of it. Jubilant Food, Bandhan Bank, Z was an exception that last week we saw some recovery, but overall trend is negative. So all these stocks are something which one can rely upon, especially when it comes to a decisive downtrend. So Jubilant Food, after this 4 or 5 weeks of consolidation, this week we saw a red candle, means a negative closing. That clearly shows that after this pause, it's set for the next leg of down move. So close to around 380, 375 could be the area where it might test. So overall, if we summarize the observations, first when it comes to the index, in Nifty we are expecting a rebound, but yes, there are multiple hurdles around 250 to 300 area, 17,250 to 17,300 area to start with, then at 17,400 mark also. So we are not anticipating any strong, recovery or rebound, is what the indications are. But yes, the silver lining is that we are still holding the lower band of the declining channel. That is something which is positive, and which is helping, and which is adding to the possibility that we should see some rebound first before the next leg of down move. Banking also, seeing a rebound, but mixed trend within the private banking space makes it very difficult that how much rebound we could see. So 40,000 is something that we should keep a close eye on. In case if it manages to surpass that level, then we can anticipate that this rebound can extend further. But again, as we have kept mentioning that we are not seeing decisive trend across the private banking majors. Prefer the stocks which are participating in the move, not the one which are like trading against the trend. So avoid Indus and bank that we precisely mentioned. Now, on the stock specific front, we talked about Gale, which is quoting at the record high. There could be some consolidation, but the tone looks positive. We can continue to look for buying positions. IEX above 155, expect strong momentum. Then on the weaker side, SDFC Life and Jubilant Foods are the two candidates which one can look at for shorting possibilities. So yeah, that is all from the presentation part. Now we'll do a quick poll and then we'll start with the Q&A. So please fill in your feedback. And once you are done with this, you can start posting your question using that Q&A tab. And please make sure that we are posting the questions around the indices, around the sectoral trend, not on the individual stocks. Please quickly fill this feedback so that we can start with the Q&A. And in case if you're done with the feedback, you can start posting your question using that Q&A tab. All right, let's start with the Q&A now. Okay, so the first question is for like how we are seeing the IT pack. So IT, yes, in line with the other sector, IT was also under pressure, and that's the reason why IT was among the top losers also when it comes to the sectoral trend. But we feel that IT index closer to around 28, 400, 500 zone. The IT index is likely to take a breather. So off late, we are seeing mixed trend within the IT majors also. Like today, Infosys was making attempt to recover, but TCS was like also making a similar attempt despite the news of management change and all which is going on. So we believe that there's a possibility of consolidation in the IT majors also in the near future. And among the private banking, private IT majors, the preference should be given to HCL Tech, because this is one stock wherein we have hardly seen any major participation on the down days, and in fact it participated strongly today, followed by Infosys, wherein we are seeing recovery, then TCS, and Wipro is something that one should avoid. All right, next question on what is our view on the US crisis on Indian markets, where we are expecting the markets in the next 2 weeks. So Mr. Rajesh, that is what we have shared. Whatever the kind of move that we are seeing in our markets is largely the reflection of the global trend. So it's nothing that, of course, we don't have any major event lined up or any major data which a market could react to, when it comes to clues. So it's more of like a global trend which is dictating our market move. So as of now, we feel that the stability in the global front is going to be critical for our markets to make any meaningful recovery. And that's why we are taking cautious stance, wherein we are seeing that their up move could be capped to around 17,400 levels in the next entire week, despite being trading closer to the 17,100 mark. So as of now, the indications are mixed. Plus, we have an important event of US Fed policy also. So markets are keeping a close eye on that. How after this, banking crisis, the Fed is going to change, whether it's going to change the stance or not. All these factors going to dictate the trend. But as per the price action, indications are in the favor that there could be a bit of a consolidation, at least for the next week. And since we have important event, in the following week, there's very strong possibility that we might see a directional move. It's very difficult to say which direction as of now, but there's a possibility that in case if we manage to hold 16,800, then yes, there could be a strong recovery, which can help the index to inch towards 17,600 levels also. But as of now, 17,400 to 16,800 is something that we are largely eyeing in. Next question from Mr. Balaji on which sector that we expect to inch strongly next week. So as we know, we were discussing that there is no particular sector wherein we are seeing strong traction except the PSE. Nifty PSE is basically a thematic sector basically wherein we are seeing buying interest. But other than that, if you see, IT, banking, auto, all these sectors are indicating mixed trend. So we feel that, yeah, FMCG slightly looks better. Pharma selectively, yes, we are seeing a bit of a recovery. So it's anyways like, we see this kind of move, when the market trends deteriorate due to the safe haven buying. But I doubt that this trend is going to continue. And even in those sectors also, we are not seeing a very strong or decisive trend. So the idea is instead of focusing on any particular sector, focus on stocks. And just to give you, additional input on this, because if you talk about the Nifty basket, Nifty 50 basket, I guess last week when we discussed about it, there were around 24 stocks which were trading above the long-term averages. So long-term averages basically that shows that what is the overall trend. So 200 days of exponential moving average is what we use. So that shows the overall trend, means in a year or maybe more time duration, what is the overall trend. If it is up above that 200 mark, 200 EMA, so that shows that yes, the overall trend, the long-term trend is intact. Now that count has shifted from 24 to 16 or 17. So you can see that the rest of 33 counters are below their long-term averages. So even if we see some recovery, which stock is going to participate is something that one should focus on. So stocks which are anyways not participating on the down days means they are not as bad as, or they are not seeing similar kind of treatment on the down days, are likely to perform better when the market is going to recover. So focus on those names. So Aman, that is what we've shared on viewer IT pack. Yes, we have results scheduled this in the coming weeks, in the coming months. So as of now, there's no clear indication. One thing which we keep a close watch on is Nasdaq Composite for clues. So even during the last week, we observed a couple of times wherein the Nasdaq Composite was trading with a very strong bias, but that didn't reflect in our market. So this is something that usually the trend that we trade in sync with the Nasdaq Composite when it comes to the IT major. But as of now, we are not seeing the similar kind of trend. So one should be very cautious. And as you have said that the preference should be given to the stocks which are participating, which are showing relatively higher strength. So HCL Tech is one name, wherein we are not seeing similar kind of a decline what we have been observing in the other IT majors. All right, next on pharma. So yes, pharma, we are seeing selective buying, but it's too early to say whether the sector has reversed. So it's something that, again, I would recommend to follow the stock specific approach. Today, when I was scanning the sector, Dr. Reddy's, Oro Pharma, these are some of the names wherein we are seeing traction. And at the same time, Biocon has witnessed a breakdown below the multiple month support zone. So it's not same scale through which you can just measure all these stocks. So the idea should be that one should stick with the stocks which are performing well when we are participating and when we are trying to capture some move in the rebound. And at the same time, give preference to the index majors, avoid broader market indices like mid cap and small cap when we are playing this rebound. Let the market stabilize the trend. Let the market show that the trend has reversed. Then we can look at the broader indices. As of now, the focus should be more on the index majors, because it's easy to hedge those position, or to the volatility also remains slightly lower. But mid cap and small cap, we all know the kind of carnage that we see on down days. So all right, with this we have answered all the queries. So thank you everyone for joining in, and next week same time we are going to connect, and till then take care. Thank you.